Hi, folks. Please read the disclaimer. This is the Ask Weekend Investing round 65. So, every week we do a question answer session where we collect queries and we try to answer them. We've done 64 rounds before. All of the videos are available in the description. You can do a binge watch anytime you like. Aman Jain has the first question for the day. I do not have very I don't or have very low knowledge about markets, but markets attract me, and I also feel attracted to the market. And I have like invested very low amount based on recommendations from few accounts on Twitter, and all my money is gone now. And I want to learn basics from very starting and understand how things work. So for this, I want your help. Like, where can I start? Okay, so it's a longish sort of answer, but I'll try to summarize this. First of all, never look for recommendations from anybody else because unless they are able to guide you through the journey of buying as well as selling, just getting buy recommendations from somewhere doesn't help. In fact, that's the worst thing to do. Second is you will need to do a lot of reading and trying to understand how the market is working. There's a lot of resource available on the internet. You can go to Zerodha Varsity. You can read some, the classical books. Again, it will depend upon whether you would like to, go the fundamental route, or maybe do something like what we are doing at momentum investing. There's very different ways of achieving the same purpose, which is making money from the market. So there could be a person who will do value investing. His thesis would be very different from a person, let's say, who's doing some short term swing trading. Somebody may be doing momentum investing. Somebody may be doing some arbitrage between different markets. Somebody may be doing perhaps special situations kind of uh, investing where companies are restructuring or splitting into different businesses of that nature. So there are so many ways of investing, trading in the markets, and finding that sweet spot for yourself, because everybody's built differently. What I may be comfortable with, you may not be comfortable with that. So you have to find, in a way, you are trying to find yourself, that who are you, what are you comfortable with. And once you find that, you'll have to try a lot of things. You should not get despondent if you don't get success in a few years, because it's a very long term journey. Once you are on that journey, it will stay with you for the rest of your life. So it is good that you are exploring these things, but certainly this is not uh, something that anybody else can give you a recommendation on and you can make money on. You'll have to figure out what is your mojo in terms of how you would like to make money from the market. And I can tell you, once you find that, there is no looking back. Anirudh says, impressed by all seasons model. Two questions. Is it possible to replicate the opposite concept of asset balancing and create a momentum chasing product in similar model? Allocate max to what is running hard, so them both are momentum chasing as well as it is possible to create that. It is certainly possible to create that. In fact, if you do the opposite of all seasons, whatever percentage is being allocated to any asset class, if you do the reverse of that, if it is 75-25 equity to gold, you do 75-25 gold to equity, and you got this the opposite, right? So one can just um, do that if that is preferable, but don't do both, because when you bring together both, it becomes it nullifies each other and it becomes a 50-50 situation. The second question is, similar to all season model, can you consider products replacing only the equity allocation with a momentum kind of strategy on Nifty 200 or Nifty 500 universe, so that we can confidently achieve? So protection is already built into all the strategies. They will either rotate into cash, or they will rotate into stocks that are safer. And over a full cycle, I don't see any reason for any protection based situation to be not be fulfilled. In addition to all strategies, you can also do asset allocation. You can invest in gold and other things. So I think On a asset basis between gold and Nifty, it is possible to do this, but with stocks, it becomes a bit messy. Deep Parik says, in the near term, gold price may rise, but above $4,000 could be challenging. Why should we have this view that above 4,000 could be challenging? Just because we were at 2,000, 3,000, hence 4,000 looks challenging. Tomorrow, if it goes to 10,000, 4,000 will start looking cheap. So that is one part. Let's get that out of the way. And don't allow any price level to dictate whether it is challenging or not, because we don't know what will happen. It may go down to 3,000, it may go down, it may go up to 10,000. Once geopolitical tensions ease, interest rates increase. First of all, geopolitical tensions don't look like easing at all going forward. They look like they will continue to increase. Interest rates increase unlikely to happen because the US administration don't want that to happen. ETF inflows shift back to equities. Why will a metal ETF shift back to equities when world will become even more uncertain and unstable? So the scenario that you are painting is a Goldilocks scenario. It may happen, but that's a very poor chance of it happening. But let's go along. Is it possible for gold to retrace to 2,600? Yes, it is possible. Certainly, it is possible. It is possible for gold to go to 2,000, 1,500. Nobody can put a floor to anything. If and then the tweet I did this morning, you may have seen it on X. Reliance, HDFC, all these kind of stocks dropped 60 to 80% in 2008. If the blue chip boys can do that, then anything. It is all about liquidity flow. Tomorrow, if US says that I'm going to sell 8,000 tons of gold, you forget 2,600, gold will come down to $1,000. But tomorrow, if US says I want to add 8,000 tons of gold, gold will go to $15,000. So there is no point of these, projecting these numbers, because anything can happen both on the upside as well as on the downside. You play along your strategy and hopefully that will work for you. Nikhil says, how did you decide on designing strategies for weekend investing? Well, I was designing strategies for myself and weekend investing happened along the way. Did you take any survey from people on what really they want? No, as I answered in the first question, it was my strategies for myself. I put them out on X. Some people liked it. They said we also want to play along, and that's how weekend investing started. So I did not take a survey of what people want because it was never meant to be for others. How did you position yourself with competitors in the beginning of small case business? I had no competitors. I was the first small case manager. Competition came much later. And even till today, there are perhaps 100 plus managers on small case. I don't look at anybody's products. I don't look at any competition. I don't look at any numbers from what they're doing. I am very happy doing what I'm doing, and I know I'm trying my best to give a great product to our subscribers. And I really don't care what my competitors do. Seriously, I mean, you may say that I'm saying it for the heck of saying it, but I really don't care. So a lot of people look at their business vis-a-vis competitors as their main focus. I don't do that. Satyajit says, what exactly is momentum? Okay. So momentum is basically a propensity of a stock to continue its motion. Just like that Newton's third law you would have read in your physics sixth grade, that a body in motion continues to remain in motion until an external force is applied to it. Momentum is exactly like that in stocks reference, where a stock which is moving up continues to move up until it doesn't, and the reverse also. It starts to move down, it continues to move down till it doesn't. This phenomena that the action continues for some time, this is what is momentum. In a way, Nifty 50 is also momentum strategy. Yes, I have been saying this for a long time. Nifty 50 is also momentum strategy, where losers are shunted out every 6 months and strong stocks are brought in. Any strategy can be momentum as per design it follows, or is it price momentum that really matters? I think momentum is a uh, pervasive feature without which no money can be made in the markets. Even if you are naming your strategy as a value investing strategy, where maybe you're looking for some of the parts or earnings, discounted earnings, or whatever it may be, you will make money only when the price moves. And the price will move only when there is momentum. So, momentum is that essential factor for anybody to make any money out of this market. So, a value investor also uses momentum to make money actually. His initial decision may not be based on momentum, but momentum is required for him to extract value and make money out of it. I hope some answer was there for you. Srikant says, I am doing monthly SIP on top 100 ETF, gold, silver, debt, 25% each. Is it good rather than investing in stocks as a beginner? It's good for beginners, no doubt. Beginners need not worry too much about asset allocation because I'm supposing that in the beginning you don't have much capital anyways. So it is better to be more focused on trying to find that niche where you want to play rather than be overly safe, and capital preservation should not be your initial aim when you're starting out. Once you have a decent kitty, then perhaps that becomes important, but when you're starting out, I think you don't need so much asset allocation. So but yeah, it's good to learn from ETFs, etc., and then graduate into perhaps direct stocks, etc., going forward. Second question is it good to small case every month, considering subscribe to MINNF10 rather than mutual funds? Yeah, I think it's great that you have chosen small cases versus mutual funds. Mutual funds are usually very large entities. Some mutual funds are more than 1 lakh crores in AUM, and they are unable to move nimbly in the markets because they need gigantic buy and sell positions to move in the market. So it's good to be in smaller groups, and that those small groups can move more nimbly. Dinesh says, based on your views and the global currency reset currently underway, it is clear that gold continues to be hot. It is also true that any allocation that we make has to be meaningful and material. Given this context, are we in the middle of a once in a lifetime opportunity vis-a-vis gold? Is it time to go all in? So I'll agree with with your statement that we are in the middle of once in a lifetime opportunity. Uh, is it time to go all in? It will depend upon how risk averse you are as a person. I know for sure for myself that gold is going much higher, but am I such a risk taker that I'll abandon everything else and go all in onto gold? No, I won't do that. I'll perhaps have a bias towards gold, have it the allocation be much more than where perhaps I would want it to be, but I won't go all in. But that's because of my nature of not being so aggressive. You perhaps could be an aggressive person in the sense that you have taken such bets in the past and they have worked for you, so you could go that way. In my view, I I tend to keep things in a more balanced manner, even though some opportunity is getting lost. So let's say I have 100 rupees and I've allocated 50 to gold and 50 to equity, just for example's sake. Now, if once in a lifetime opportunity is happening and gold is going 10x, let's just for hypothetical assume that we are going 10x. So instead of 1,000, I'll go 500 plus equity returns, maybe 600 700, whatever it may be. I'm happier with that actually, because I did not do a rash bet based on my gut feel. I don't do that. I don't do a gut feel trade. So again, it will depend upon how you think about uh, this trade and how much of a risk taker you are. I'll agree with the fact that you've mentioned that we are currently in a once in a lifetime kind of a situation where a monetary reset is happening. Whether it happens in the next 1 year or the next 10 years or the next 20 years, I really don't know. But we are certainly in a period where history books will be written about this period, how things changed in the 2020s. Last one is more importantly on the converse, what are the downside risks for gold now? Example, fall, stuck in a zone, stable coin impact, etc. So that is the sort of the black hole in the story where we can uh, convince ourselves that there's no other way but gold to go up. But there is a complete system that has been working to suppress gold also. The entire establishment, the administration of Western world has been pushing down gold all these years because they also want the fiat currency system to sustain, and they are struggling right now. So you never know what may come. You know, in 1930s they announced confiscation of gold. What if governments, announce confiscation of physical gold? Gold will get smashed like nobody's business, right? So you can't rule out that risk that the administration can take such measures which can destroy this thesis that we have. That chance will always be there. Vishwanath says how to overcome portfolio size limits when running momentum strategies. So for an individual investor, there is no issue. It is only for managers who have tens of thousands of uh, users does the portfolio size become very large. But if you are an individual, I'm assuming your size is less than 500,000, 2,000 crores. That's not a problem. And even if it is more than that, even then you would be able to design strategies which are more diverse in terms of numbers. So you'll spread out your money more in more numbers, but still allow that thesis to run. That is very much possible, and across geographies as well. If I had that kind of money, I would do that. Jitendra says, I know you prefer physical gold over everything else, but given tax advantage, SGBs are unbeatable. Yes, I will agree. Tax advantage is huge in SGB. The problem with SGB also is that it's a tool in government's hand. Tomorrow they can come out with a notification saying that SGBs are no longer tax free, or they can come out and say that we are bleeding heavily because of SGBs, and we are exercising the option to call back all SGBs at today's price. So all those games can be played when the product is has been manufactured by the government itself, or by the RBI itself. So there is a sort of a non-neutrality in SGB. You are dependent on the RBI or the government to stay within the framework that they started with. If they deviate, they can screw you hard. So that is one issue with SGB. Having said that, SGB was a beautiful product, is a beautiful product from a buyer's perspective. It's a horrible product from the RBI or government's perspective. They are losing money left, right, and center on this, and and people are of course taking advantage of it. The crazy premium on SGB, as you are mentioning, is because of this reason that the tax advantage, if you add on to the NAV, let's say today's NAV is somewhere near, let's say X, then you need to add, the advantage of the tax also onto it, and that's why the premium exists uh, on that product. There was a time when nobody was buying SGBs, and I was recommending them to be bought in discount, and a lot of people bought in discount. uh, so physical gold is something which is, um, as they say, whoever holds the gold owns the gold. It is a non counterparty risk um, asset. So from that perspective, all digital ETF gold, SGB gold is a is something which is, you are dependent on the other party. ETF is telling you, yes, I have the gold. You'll have to believe that, right? Digital gold platform is telling you, I have the gold, don't worry. You'll have to believe that. So if you are willing to believe, that's fine. Some people don't want to believe. So, from that point of view. Um, in case of silver ETF, we have INAV. Is there a way to evaluate which series of SGBs would buy? I'm confused why you are mixing silver ETF with SGBs. I'll skip this. Based on your recommendation, I have 50% of my age in gold. It is like 80% of all my profits now. Congratulations. My question is, why do you not recommend debt as a cushion for gold for portfolios? Is it purely taxation or any other reason? I don't like debt too much. I think debt does not play any role when it comes to doing anything for my portfolio. I have equities, I have gold, and other asset classes, real estate, whatever. My equities are very well hedged with gold. And whenever gold doesn't do well, equity is doing well. So where is the need for me to, put in a third element, which otherwise in normal situations runs like a dead man? So I don't like that. And given the situation that we are, after 40 years of interest rate declines, we are now looking at a interest rate cycle going up for I don't know how many decades. Bonds or any debt becomes a instrument which is not desirable then. In the US, for instance, people who have had debt have not made any money in the last 10 years. It's unbelievable. And bond market is the biggest market out there. So a lot of people are bleeding like hell with debt, and I certainly don't want to risk that. The purpose should be very clear. What is debt achieving for me? It used to be 60-40 recommendation for global portfolios, 60% equity, 40% debt. Now Morgan Stanley says make it 60-20-20. 60 equities, 20 debt, 20 gold. I'm sure in the next 5 years it will become 60-40 equity and gold. Vinod says, why you don't do product launch videos for US top 10 strategy? The way you launch weekend investing other strategy, explaining corpus, how much is fees costing, etc. So we have a US top 10 strategy which has uh, the S&P 100 as its benchmark index, and this strategy runs on the vested platform, and the team which takes care of the strategy is completely segregated from the Indian equity team, and they have soft launched it so far, and at some point they will do a proper launch of it. So I'm sure that you'll hear about it when it happens. So we've come to the end of this round of weekend investing. All previous episodes are here. In case you wish to go through them, the link is there in the description. All queries have been answered. If any queries have not been answered today, please drop us a mail to support@weekendinvesting.com and we'll try to answer it. Thank you so much for watching, and do subscribe to the channel if you haven't. I'll see you next week. Thanks. Bye.